Hello, my name is Carl Hager and welcome to my video presentation of my research paper, Should Australia Broaden or Increase the Goods and Services Tax? A comparative analysis of broad-based consumption taxation in Australia, New Zealand and the UK. My paper aims to critique Australia's current GST and compare against the United Kingdom and New Zealand systems to highlight whether change is needed and if so, where change should be made. To analyse these systems, I identified the requirements of a good tax being the theoretical canons adopted from Adam Smith's maxims of taxation. These include simplicity, equity, neutrality and certainty of tax. I also utilised the 2014 OECD data on consumption tax trends. Here I used the VAT revenue ratio as a key identifying figure of an efficient tax. The VRR is the difference between the actual revenue collection and the theoretical revenue collection had a standard rate been applied to the entire potential tax base. I also used VAT or GST as a percentage of total tax collection and VAT or GST as a percentage of the nation's GDP. These analytical figures reinforce the theoretical maxims and create identifiers of a good tax. I then used these identifiers to compare Australia's current system against the systems of the UK and New Zealand. Australia's GST has not changed much since it was introduced under the Howard government in 2000. It was introduced at a rate of 10%, but with key areas of the base being excluded, including food, education and health. The tax applies a low rate on a relatively narrow base. In terms of simplicity, GST does not rank well, and this is primarily due to the exclusions from the tax base. These are complicated to apply, and there are examples where rather arbitrary treatment is applied. The exclusions increase business compliance costs and have been measured at 5% more than had there not been any exclusions from the base. The largest and most complicated subdivision is food, with the general rule being that food is GST-free unless it is pre-prepared or has undergone extra refinement. Some items seem to be at odds with the application of the legislation. For example, cow's milk being a taxable supply, however unprocessed goat's milk is GST-free. Conventionally, GST is considered to be equitable, albeit fundamentally regressive in nature. GST is horizontally equitable, as it does not treat individuals differently based on consumption, with a caveat that the treatment of cross-border transactions and intangibles damages perception. GST is not vertically equitable, however, due to the percentage of income spent on consumption declining as income levels rise. The exclusions of merit goods from the tax base are intended to counter the regressive nature of the flat rate, but this comes at the cost of simplicity. However, these exclusions are a general relief rather than a targeted relief, meaning they are still open to use by all taxpayers regardless of income level. The major neutrality concerns with Australia's GST stem from the differential treatment between imports and locally consumed items. The OECD measured Australia's threshold for low import items at a 2014 equivalent value of $650, and this represents a significantly higher rate than the OECD average and the rates of other nations. This creates a neutrality concern as consumers have shifted their behaviour to avoid the incidence of tax. Primarily due to the lack of change in the legislation over time, GST ranks well for certainty to taxpayers due to the clear understanding of how prior application of the GST affects the future application. This lack of change has been spurred by a provision requiring all states and territories to agree to change before any GST change can be made. Therefore, taxpayers will be well aware in advance of any upcoming changes. Using the analytical data sourced from the 2014 OECD report into consumption tax trends, we can see that Australia's comparative figures rank well behind comparable economies. Australia relies to a lesser extent on GST as a revenue source, as well as percentage of GDP. It also has a relatively low VRR. Therefore, Australia's GST is ineffective in its current form. This is due to poor simplicity, equity, and neutrality. Although it does rank well concerning certainty, the lack of policy change does not result in more effective tax. Therefore, it needs to change. Comparatively, the UK VAT is set at a rate of 20% on a narrower base similar to that of Australia. The UK system is not fundamentally simple. This is due to poorly legislated exclusions from the VAT base, as well as the use of a European Union enforced two-tiered rate system. VAT is a product of the original UK purchase tax. And unlike Australia's use of a general provision to exemptions, the UK VAT achieves zero rating with a general provision with extensive exceptions and then exceptions to the exceptions. The two-tiered rate system and a poorly drafted exemptions increase the complexity of the system greatly. Therefore, the UK VAT is far more complex than Australia's GST. The UK and Australia share similar considerations concerning equity. To combat the regressive nature of the tax, the UK has implemented zero-rated VAT items similar to the GST-free items of Australia. The addition of these zero-rated items result in a more equitable tax than the one where there are no exclusions, but once again, it ranks well for equity but bad for simplicity. Neutrality considerations that Australia has for the cross-border treatment of intangibles are not present in the UK. This is due to the EU Telecommunication Directive requiring that VAT is charged on all intangibles. VAT is therefore charged on electronic media such as music downloads, online subscriptions and movies. However, there is a strange treatment of ebooks where ebooks are taxable but normal books are tax-free, and therefore there are some neutrality concerns present in the system. The UK VAT ranks poorly for certainty, and this is due to the risk of Brexit as well as the EU VAT directives, which increase uncertainty. The UK places a greater reliance on VAT as a percentage of total tax than Australia. It meets the OECD averages for percentage of VAT per total tax revenue as well as GDP. However, the UK's VRR is lower than that of Australia, suggesting an overall less effective and efficient tax. When considering the theoretical and analytical aspects of the UK system, compared to Australia, there is some merit to increasing the GST rate. The high rate and reliance of that make it an effective revenue stream, but the fundamental design flaws limit its overall effectiveness. In Australia, any increase to the GST rate will come at the cost of equity, potentially simplicity and neutrality if made in the context of further reform. The New Zealand approach to broad-based tax is different to that of the more closely aligned Australia and UK systems, but it has been hailed by scholars as almost an idealistic approach to GST. The tax is simple to understand and apply. The simplest form of consumption tax is one where every good and service is taxed, and without exemption or exception, and New Zealand's GST operates in such a manner. It is therefore far more simple due to the inherent design. This serves as an argument in favour of a broader base, as simplicity increases the relative efficiency of a system, and this is due to fewer costs associated with advice and business compliance. Where New Zealand's GST has benefited concerning simplicity, it has lagged concerning equity. Because there are no exemptions, it is fundamentally more regressive. However, New Zealand has implemented targeted relief to overcome this regressive nature, and this is in the form of a means-tested compensation package to low-income households, making it less open to abuse and therefore overall more equitable. From the perspective of neutrality, New Zealand's GST is as close to absolute neutrality as is possible to achieve. However, it does not tax online intangibles such as music, downloads or streaming services. This represents a bit of a blemish on an otherwise neutral system. However, New Zealand has passed recent amendments to change this. New Zealand's GST conveys certainty in both legislative application as well as the approach to taxing consumption. The OECD consumption tax data substantiates the overall perception that New Zealand's GST is more effective at raising required revenue, as well as more efficient as an overall form of tax. And by comparing these systems against Australia, we're able to see that Australia ranks worse than both UK and New Zealand at broad-based consumption tax. The UK system has design flaws which indicate overall efficiency and effectiveness of the UK VAT is not as high as New Zealand's GST, and therefore New Zealand's GST is far superior in terms of simplicity, neutrality and equity. Therefore, Australia should consider adopting a system similar to New Zealand and broaden the base without raising the GST rate significantly. Thank you.